What's up, y'all? Today's live office hours are going to be freaking epic. I'm going to focus primarily on helping you go from potentially a chaotic state to one of clarity so that you can actually achieve your financial freedom goals. I really try to highlight to most people that real estate investing or even your path to financial freedom does not have to be as complicated or as challenging as it is. For a lot of people, they say they want to achieve this goal. They want financial freedom. And it doesn't even have to be through real estate. I'll explain a variety of paths to get there, but they say this is what they want to do. However, they're constantly distracted, right? You're busy. You are doing lots of different things. You're in Zoom calls. You're following this training. You're using this tool. You're doing all of these various things, but you may not be getting the results that you're looking for. You're probably feeling overwhelmed because you are spending a lot of time without getting results. You might be feeling burnt out. And the main reason for burnout isn't really that you're working too much or too hard. That can be a component of it. But a lot of people feel burnt out when they're putting in work and not getting the results that they want, right? So burnout doesn't just come from putting in work. It comes from putting in work and not getting the results that you're looking for. I think a lot of people, myself included, and a lot of people that I know and a lot of successful investors, they do work hard. But the difference is when you're getting results, it's much more motivational to continue on down this path. The people who do burn out and completely stop are those that are typically distracted, overwhelmed, chasing shiny objects. And a lot of that is because you don't have a clear plan. You may not even understand what it is that you're specifically looking to accomplish. And if you do know that, you may not have a clear plan for how you're going to get there. I would assume for the majority of you, I cannot say this just for everyone, I don't know, but it's not, your lack of results isn't coming from laziness. Like I told you just a second ago, I believe that your results, the lack of results, are not coming from you not putting in effort. It's primarily coming from you not putting in the right effort and the right things leading you to the right goals. How you solve that? Clarity and structure, right? How you continue down this loop? Lack of clarity, lack of structure. And it always starts with an end goal in mind. And for me, that changed everything for me a couple years ago when I really understood that if I wanted to be financially free, essentially as quickly as possible, right? That also balanced within my own risk tolerance. You got to make sure it's comfortable. You got to make sure you enjoy the path that you're pursuing. Then what I needed was to understand that was my goal and then reverse engineer the real step-by-step plan that would allow me to achieve that, right? Here is my actual goal. Here is the time frame in which I want to accomplish it. Here is the level of risk that I am comfortable with. What is a great plan to get there? So let me get into this in general, and then I'll tell you exactly what my plan has been. For anyone who doesn't know who I am, I'm Michael Manatskanian. I've purchased almost $25 million of real estate in just around 5 years. I've done so using little to none of my own money. I raise the majority of my capital to buy my deals. I buy my properties creatively financed, so I'm buying them for less money down. I'm paying way less interest rates. I'm getting more return for every deal that I buy. And I'm primarily managing my properties as co-living or rent by the room rentals. This allows me to buy properties or like more properties that generate more cash flow and provide me way more ownership benefits. I'll go more in depth into that coming up. But if you know anything about my path, Army veteran, right? Active duty Army, turned veteran, turned real estate investor that scaled to $25 million of real estate in just around 5 years from buying my first property, from 2020 to 2025. The core three things I focus on are just 3 C's: creative finance, capital raising, co-living, right? That's my strategy in a nutshell. So let's talk a little bit more about why I believe most investors fail. I really think it's a result of lack of clarity on your financial freedom goal, right? You don't have a clear target. What you've primarily been doing is listening to the marketing, listening to the ads, listening to the exciting thing coming up or the new challenge or the new this or the new that, this live Zoom is happening, this person's doing this, without actually thinking through what is your true financial freedom goal. And I'd even take a step back. What is your goal that you're looking to accomplish? For me, it was financial freedom. I wanted more money coming in every single month than my expenses That was my clear goal. I want more money coming in every single month than my expenses so I can live and enjoy my life without having to worry about how am I going to make money? Where's my paycheck going to come from to cover everything? For me, it's about time freedom, building wealth semi-passively. There's still work involved, don't get me wrong, but it's for a few hours a week, I get really amazing results. So putting a lot of time and effort in initially to then have a portfolio that covers my entire lifestyle and then some, as well as is constantly adding more wealth for me. That was my clear goal. For some people, it's, hey, I really need to be able to make $5,000 every single month just to cover my bills. I wasn't in that position. I was in the military and then I worked a government job. I already had my bills covered. I was already spending way less than we were making. I never made a lot of money, but I was not spending a lot either. So we covered all of our expenses. My goal was the financial freedom, the assets that allow me to be free without having to work for it, like an exchange of dollar per hour. For you have to clearly decide, is it that you're focused more on financial freedom through building a portfolio, or are you more focused on, hey, I need to get some more active income. I need to start getting some more capital. I need to start getting some more like money coming in every month just to make ends meet. So get clear on that. For the remainder of this, I'm going to talk more about financial freedom because that's my path. That's what I can help the most people do. I do active income, right? But it's not my main priority. There's plenty of other people that can go and teach you how to wholesale or whatever people are doing, or go fix and flip or whatever. For me, it's buying and owning assets using little to none of my own money that generate me money every single month and build my wealth that allows me to do whatever I want with my schedule, whatever I want with my time from anywhere in the world. It's pretty sick. That I would assume that's the end goal for everyone. That does not mean I stop working. I just choose when I work and what I work on. I work on the things that I care about. And if I choose to stop or pause, I'm in full control of that decision. It's not some employer or my family's going to be ruined if I'm told, hey, you lost your job or something. And yeah, some of you need both. I totally get that. I would always focus on active income first and then scale up to your financial freedom. It's very hard to focus on building wealth and assets if you're not able to pay your bills or if you're struggling to pay your bills. I think focusing on paying your bills is the number one thing to focus on. So let's say you have a very clear goal. Where do most investors fail after that step? I don't think they have a very step-by-step roadmap. They're either constantly switching strategies, they're constantly second guessing what they think their plan is, usually because their goal is not in alignment with what they actually want to do. They just got attracted by what someone said in their marketing or ads. They didn't fully understand, like, this is my goal, this is why I want that. So starting with that clarity and then deciding this is what I believe is the best path to get to that point. So if you don't feel very confident in your path, you're going to constantly second guess and you're constantly going to switch strategies. And you're going to be more easily manipulated through marketing and ads and challenges and Zooms and all these other things that are taking your time and energy away from accomplishing the actual goals that you want. Like if that's you, this is a safe space. Share that. Drop in the comments if you feel as if you are changing strategies a lot because you, A, don't have clarity on your goals, or B, you're getting enticed by the different things out there all the time, or even C, you always think there might be a better idea out there, or you think that let's focus on those, your goals, you're following a variety of strategies because they're not in alignment with your goals, so you're switching from strategy to strategy, or you think your strategy isn't good enough, which is why you're trying other things. I'm going to explain mine and how I got to my decision so that you could do the same for yourself. With the lack of a step-by-step roadmap, because you don't have your goals or you're just constantly chasing shiny objects, you're going to be very easily distractible, right? Like I said, chasing shiny objects is quite literally a huge waste of your time. Chasing the next thing and never progressing on the thing that makes the most sense is going to be a huge issue for you. You need to figure out what state are you in, right? Are you chasing because you don't have clarity? Are you chasing because you don't feel confident in the plan that you have? Are you chasing because the plan that you have does not align with your goals? That's foundational. And I'll tell you this, like I mentioned, burnout. Like I see a lot of people start the investing journey and fall off. Even though I've only been doing it for 5 years, I've had tremendous results. But more importantly, in the 5 years that I've done it, I've connected with thousands of other investors. The vast majority have either completely stopped trying to invest, have given primarily because they're burnt out or have had a lack of results, or they've had much less results. Once again, that's not a failure if you have less results, but it is a failure for spending a bunch of your life, your time and energy trying to accomplish a goal and you're making little to no progress, but you're wasting your life, right? Like this is the same issue that I had when I was spending a lot of time and energy analyzing investment opportunities, but never making an offer. This was the struggle I had before I ever bought my first property. I was putting in a lot of time and effort, finding deals, and analyzing them, even great ones, but I was never making the offer. So I was never going to actually own real estate because I was not putting in the offer. I was not telling the sellers, I was not putting myself out there to actually be in a position to buy those properties. That was burning me out. Obviously, I'm putting all this time and effort, spending dozens of hours a week, at least 10 hours a week, doing all this with no assets to show for it. So what I did was I gave myself an ultimatum at that point. I realized there was a lot of other investors in my local market that were actually getting the results that I wanted, but all I was getting for the time and effort I was putting in was some really good numbers on a spreadsheet. If I wanted financial freedom, I had to buy properties, which meant I had to submit offers and go through the entire process, even if I did not know every step of the way. The thing about that is I didn't have a clear strategy at that point. I didn't realize that I was stuck in paralysis by analysis. And the reason why I made a decision to stop investing or just make the offer, like why I gave myself an ultimatum to either make an offer and progress forward or just stop, was because you only have one life at the end of the day. I tell most people, if you're doing all this and you're not getting the results that you want, but you're also not willing to change what you're doing, right? That's essentially the definition of insanity. I think Einstein said it, right? You're doing the same things and expecting different outcomes, right? If you're doing the same thing and expecting a different outcome, that's not usually how it works, right? That's the definition of insanity. And if you're unwilling to change if something's not working for you, then I don't really have a lot of advice for you. And that was my issue then too, is I thought, okay, well, I'm doing the thing, but I realized I was not doing the important things that I should have been. Why I say all that is because you only have one freaking life. You are better off not spending your time, money, energy away from your family, away from your hobbies, away from enjoying your life, trying to pursue something that's not generating you the results that you want, right? You're better off just living your life instead. Just work your job like most people are going to do anyway. The 95+% of people work their job for the rest of their life. Maybe some will get to retire, maybe not with enough, but they'll get to retire at some point. Just enjoy that journey. Don't waste 10+ hours a week trying to pursue something that's taken away from you enjoying your current life and you're getting no results that make your life better. If anything, it stresses you out more. So either at that point, if you're unwilling to change, just go and enjoy your life. Don't even worry about changing. Or it's your time to buckle down and say, maybe there's things I could be doing better, right? Starts with clarity. What are those things you should be doing better? Go through this roadmap very specifically. Have a very clear goal for what you're looking to accomplish and roughly when. Decide a path that you're going to pursue. Develop the roadmap for it, or even better, copy someone else's roadmap, which is basically what I do. I'm not trying to reinvent the wheel over and over again. I've learned from others, implemented what they do. I've improved it. And now I have my own super investor blueprint, that super investor path that I mentioned, creative financing, capital raising, co-living, very data driven, very analytical for why I went that route. And I'll explain that, but have your goal, choose your path, ideally follow someone's path that is more successful than you are. And what they're doing is in alignment with what you're looking to do, both and you feel like you would enjoy it, or at least you'd enjoy the results from it, and it's within the timeline that you're looking for. And then put in the work that you need to follow that and stop chasing all the distractions. This is where I help a lot of people in the sense of they feel like they have a huge self-discipline problem. They cannot take the actions that they need to achieve the results that they want. After talking to lots of people as well, I realize it's not a self-discipline problem necessarily. they're putting in work, they're just putting it in the wrong way. They're just being distracted rather than putting in the work to the areas that actually move the needle for them. Or they feel frozen and stuck. And some of you guys might have gone through this. You feel frozen and stuck. You don't know what to do next. And then you blame it. Oh, I don't have self-discipline to put in the work. A lot of the times it's not that. You just don't know what your path is. Are you aligned with it? And what are the steps you need to take? So when it comes to trying to decide what should I be doing, you should already know what you should be doing, right? Especially for real estate investing, there's only so many activities you can do, and there's different times for each of those. You need to understand which of those you need to focus on and why, and is that progressing you towards your goal? Everything else, all the connection calls you're doing with people, all the random Zooms you're hopping into, all the challenges that you're going, like all the real estate challenges that you're joining, chasing multifamily one day to short-term rentals, to RV parks, to co-living, to long-term, to Section 8, to this, to that. It's exhausting just saying it, right? Like that is causing your issues, quite literally. When you do not have a clear plan, distractions happen because you do not know when to say yes or no to the right opportunities. You should be focusing all your time and energy saying yes to the things that align with the goals and the path that you said you wanted, and no to everything else. You only have so much time in a day. Even if you're doing real estate full time, you only have so much time in a day. And more importantly, you could be spending that time doing other things rather than wasting it doing the wrong things. Or at least if you are going to waste it, at least just come to the clarity that that's what's happening. Remember, clarity creates focus, and then focus is what creates your progress. You have all that by understanding your goals and then working towards it, following a proven path. With that, let's change the lighting in here. Let's make it a little more optimistic. Let's get into some more solutions for you guys. So let's talk about the 3 main paths to financial freedom, at least the way that I think about it. I think of financial freedom in the sense that ideally, you might have to put in upfront work or money, but at some point you are living off of the assets that you've invested in, and you no longer have to work again, at least not exchanging time for money directly, right? That's the goal. You no longer have to work a job. You no longer have to trade your time for money. You have all of your bills covered and then some, and you're also building wealth as you go, right? In my opinion, there are 3 key ways to get there for the majority of people. I guess I'll say what they are first, and we'll expand onto each one. One of them is just investing in the stock market. A lot of real estate investors hate that concept. I do invest some money in the stock market for diversification. However, there's a lot of flaws to that strategy that I'll get into. Next is investing in real estate using your own money, right? It's very similar to stocks, but slightly different results. And then the last one is investing in real estate, but investing using other people's money, right? So you're bringing the deals, they're bringing the money, you guys own these assets together. Let's start from the very beginning. Like my path, as I mentioned, creatively financed deals, so real estate, but making them even better with the creative finance, raising money to buy those deals, so other people's money to buy those deals, and then I use the co-living strategy so that I get more returns and buy more properties that are more scalable with my path. So for stocks, the thing about stocks is it's the slowest of the 3 options. However, I would say it's much more guaranteed and steady, and it allows you to invest little to no time, except for the fact that you're going to have to work a lot longer to achieve your goals. The concept for investing in stocks, at least in diversified index funds, just tracking the total US stock market, is earn money at your job. Whatever you don't spend is savings. Whatever you save, you invest into stocks. The more money that you earn, or even more importantly, the more money that you save, the more you can invest in stocks. Additionally, the number one thing you can do when investing in stocks is invest as early as possible. So the earlier you can invest in your life, or the more that you can put in, the faster you will achieve your goals. However, for the majority of people, it's going to take you no less than 30 plus years to achieve that. So for the next 30 plus years, from when you start to when you're truly financially free, it'll take you no less than 30 years. Some people would take significantly longer than that. Only on the very rare occasion does it take less than that. However, it's pretty certain, as long as you don't believe the entire United States economy is going to collapse, But the reason why it's slower is because you have to earn that money. So maybe you're saving time by investing in stocks and you don't have to really oversee that. You just put the money in, just keep investing passively. There's not a lot of thought behind it, but you have to work for an extended period of time to earn that money to then be able to save it. So you're not spending your money, right? You're saving as much of it as possible. The more that you save, the less that you spend, the less that you enjoy your life during that period. In theory, the faster you can retire through stocks. The issue with it is it's going to take you a long time. In theory, you're saving time by not spending a lot of time and energy in like understanding how you're going to invest in stocks, or like you don't have to really oversee anything or spend a lot of time and effort on that. But you have to work significantly longer. It's very obvious when you compare it that you're going to spend way more time going this route if you're trying to achieve the same goal. And a big part of that is there's no leverage in stocks, right? I'll say there's little leverage in stocks. And if there is, and when you do it, there's a lot of risk when you do it with stocks. This is bad because leverage is what allows you to no longer have to earn and save and only be able to invest that money, right? Like you can only invest in stocks while you earn and save. There's no leverage. Where that's why real estate investing, even using your own money, is substantially faster than stocks. However, it's going to take more effort, right? When you are buying a property, let's say the traditional way using your own money, you're going to go buy a $100,000 property. The bank will finance you 75% of that. They'll give you a loan for $75,000 and you'll be able to put in $25,000 to own that property. It still has debt, but you're the owner of the property. You benefit from it. You generate the cash flow. You generate the appreciation. You generate the tax benefits. You generate the debt pay down through your real estate for putting 25% or $25,000 for a $100,000 asset. That is leverage through the bank, right? You still needed to earn and save that $25,000 to buy that property. And you have to put in more work to own your property and have it generate the returns that you want. But the advantage there is you're leveraging the bank's money, right? Even that is other people's money, but that's more traditional. The bank's money for a fee, right? But that is leverage. That is why, in theory, you can achieve your financial freedom goals more quickly through real estate than you can stocks. That $25,000 that you had to buy real estate gets you a $100,000 asset. If you have $25,000 to invest in stocks, you have $25,000 worth of stocks, right? That's the leverage component there. Put in 25, get ownership of a $100,000 asset, get all the benefits of a $100,000 asset, even though you only put 25% down into that. However, you're still bottlenecked. It's slower than my path because you still have to earn and save that money, right? So it's nice that that $25,000 gets you a $100,000 asset. However, how many of those can you truly do with your own money, your own savings, or how long would it truly take you to achieve that using your own money to build a portfolio to the size in which you no longer have to work again? For most people, it'll take 10, 20, 30 years. For most people, they can buy, even saving $25,000 for the majority of people is a lot of money to save on a yearly basis. Let's say you can save $25,000. That means you can buy one property a year that's worth $100,000. That is, then you're putting $25,000 down. It's a little disingenuous though, because not only do you have to put in the $25,000 down payment, there's closing costs. Sometimes you have to renovate. The way I do co-living, you have to furnish, you have to have reserves set aside, all these other things. So that $25,000 real quickly becomes substantially more than that. The thing with that is, on average, most people don't want to own $100,000 properties because they don't generate you a lot of returns and they're more work than they're worth often. You'll hear a lot of people in the Section 8 space say, yeah, buy these super cheap houses, yada, yada, whatever. But it's like, now you're going to need hundreds of those to have $10,000 a month coming in to cover your lifestyle goals. So to give you perspective, if you want to have stocks, the way to think about how much money you need to generate $10,000 of cash flow is the 4% rule. So essentially you can live off your stock portfolio and pull out 4% for the rest of your life and you'll be good. Quick math on that is just multiply however much you want to spend per year times 25, right? And that'll get you how much you need in stocks. So if I quickly did that and you want $10,000 a month or $120,000 a year from stocks times 25, you need a stock portfolio of $300,000 or $3 million. One few zeros off, right? $3 million of a stock portfolio to be able to have $10,000 a month of cash flow coming in. Hopefully that makes sense. With that, don't assume you have to buy $3 million of stocks. You buy some and it continues to grow and compound. The more that you invest and the earlier that you invest, the more compound interest works in your favor. But it does take a substantial amount of time for that to really build up. To achieve a $3 million portfolio in 40 years, let's do this. Would you guys, let me do this for you. Let me screen share. I'll literally show you guys how you can do this for yourself. And once again, I'm not the huge advocate for stocks, but there's a component for diversification for people who are already doing really well in real estate. But so compound interest calculator, this is the IRS website. So initial investment, let's just say you're starting at zero. You're contributing, how much money we'll say? How much can someone contribute monthly? Even $2,000, that's $24,000 a year, right? That's pretty close to that $25,000. That's more than most people. I mean, shoot, some people barely make $2,000. And let's see what it looks like if we invest over 40 years. So over 40 years, what that turns into. Our goal is to have $3 million. Assuming an estimated interest rate of around 8% is pretty in line with the stock market, accounting for inflation. 7 to 8%. I'm being I'm being a little more aggressive in saying 8%. And let's do the compound. So what does that turn into? Okay, in 40 years, that turns into $6 million, right? That's a lot of money invested for a long period of time. And you see here, the most important thing here is for the first several years, your money's not working very hard. But in the last 10 years is where it makes the biggest difference. So when people think, oh, 40 years, well, that means I could do it in I could do it in 10 years or 20. Well, that's not how it works, right? Like the compounding is what really carries it for you. So if we just change this to 30 years, assuming you're investing a ton of money a year, 24,000, but that's the same we're going to say for real estate. In 30 years, just 10 years less, that's under the 3 million that you need. See how important compounding is and why time is your best friend for stocks. So for people who were like me and who started investing in stocks while I think I started like 19 years old, putting whatever little bits I could into a Roth IRA, I have this advantage. For a lot of you guys starting out, do you have another 30 plus years to invest in the stock market to achieve your goals? That's up to you. I don't really know. But the earlier you start, the more beneficial stocks are. But I understand the majority of the work that's done with stocks is in the last bits. Like the longer you're investing in stocks, the more compounding that you're getting, because just investing 24,000 is irrelevant. You've invested in 30 years, 720,000, but you've got over $2.7 million in portfolio value because of the compounding. We go once again, add another 10 years, or let's even go, let's add the other 10 years. That over doubles that in the next 10 years because of compounding, right? This is why compound interest is huge. You still get those benefits from owning real estate. You get that from your property values appreciating, and you're getting this cash flow much sooner to get to that goal. So if you invested, what was it, $700,000 roughly? If you invested $700,000 in over 30 years, that's $24,000 a year, right? The stock route is just take that same money, or the real estate route is take that same money and invest in real estate. Well, the downside of real estate is it's probably going to cost you more than $25,000 per property, especially understanding that I personally don't like to buy really cheap properties because then I'm losing a lot of the ownership benefits. And it's honestly a lot harder to manage properties that are cheaper or in lower cost, like super lower cost of living markets, because tenant base, when you're buying really cheap properties. B, typically you're buying in these smaller markets, so there's less people providing services like property managers, contractors, handymen. And these properties that tend to be a lot lower cost, they're only generating you maybe $100, $200 a month of cash flow. So how many of those properties do you need to stack before it's actually worthwhile? Let's see. So if you're getting, let's say $200 a month times 12, that's $2,400 a year in cash flow. Well, if your goal is $120,000 a year, and you're getting there $2,400 at a time, you would need 50 properties, assuming that's your actual returns. If you're buying 50 properties, right? Understand that. So if your goal is $120,000 a year or $10,000 a month, you're going to need 50 properties generating you $200 a month of cash flow to get there. 50 properties times, let's just say 25,000 on the lowest end. Now you're investing 1.25 million to get there. So yeah, you have the benefit of leverage through real estate, and you could get there in theory much quicker. Not in this scenario, because you need 50 years. You would need 50 years to get there, and you would need 50 years to get there, investing $25,000 at a time. So it take you 50 years to save 1.25 million and invest that to build your portfolio using your own money. Like I tell most people, I've built my portfolio. I have over close to $25 million of real estate, not accounting for a lot of the appreciation I've gotten over the last few years. That's just the money. That's the assets that we've purchased, right? Not accounting for all the benefits of appreciation or even the debt pay down benefits. But there's no way ever I could have got $25 million of real estate, because it cost me around $6 million to buy that portfolio. Well, once again, it didn't really cost me that. It was, I found great deals. I operate the deals. I bring in partners, so we own these properties together. In exchange, they get ownership and returns. I get ownership and returns. But understand that took $6 million. Even assuming I'm making $150,000 a year as a job, it would take me 40 years of income to earn $6 million to have built my portfolio. It would have taken 40 years of making $150,000 a year to just have enough earnings to build my portfolio, right? That's not savings, that's earnings to build that portfolio. That is really the biggest superpower of real estate, is not only are you leveraging the bank's debt to take over more asset than you're investing in, but you're also able to buy real estate using other people's money, as long as you're providing great investment opportunities and connecting with the right people. Buying real estate using other people's money allows you to achieve your goals way faster, but there are risks involved, right? You're adding more debt to a property. You have a lot more responsibility because now there's other people's money tied into your investments, and it requires skill. I don't think that people buying their very first or even second property necessarily should be using other people's money. I think it's best if you prove what you can do or heavily invest in your education to ensure that you're minimizing the risk for your capital partners. The downside of using other people's money is you're putting other people's money at risk. You're the one who benefits from it massively, myself included. I get infinite returns. Other people are putting in money. I'm generating ownership and returns from that. My returns are infinite. There's no, I don't put in any money to get that. I put in sweat equity. I put in work, hustle, experience, knowledge to get that, but I'm not putting in my money. The risk there is I've seen a lot of real estate investors lose their lenders or capital partners' money because they don't know what they're doing, or they're just bad actors. And the problem with that is lenders, they're people like you and I. Like I said it, let's say most people can't even save $25,000 a year, but someone invests $50,000 with you to buy a deal. Well, how many years did it take them to save that? How much confidence do they have to have in you to be able to invest with you? And now you let them down. Are they going to complete? Now they just lost money. Are they going to think this is all a scam? Are they going to give up? Are they going to not pursue this path anymore when they were trying to change their family's financial trajectory, and you derailed them completely from that, not just financially, but their mindset? And that really stunts a lot of people potentially for the rest of their life. So there's a lot of not just risk on the investment because you're adding more debt to it, but more so a lot of responsibility, and people need to truly treat other people's money at such a high level, because that is a person. Your capital partner is a person who worked hard, who saved, who trusted you to invest with you to achieve certain results. Does that mean every single projection you make is going to go perfectly for a real estate investment? No, of course not. However, I've seen a lot of people just take capital partners' monies, take their money, be completely bad actors, or buy way too many properties than they can comfortably handle, and they're really setting everyone up for failure. So if I was to give you a very simple summary on the three main paths of financial freedom: stocks, it's slow and steady and more so guaranteed. It's just going to take a lot longer, and you have to be able to earn and save and invest that money. And your best benefit is starting early, and just understand it's going to take you several decades to get there. the majority of the work that's going to happen, the compounding is going to happen in the last couple of years, regardless of how your journey is. But it's nice because it doesn't take a lot of time in the meanwhile to learn or invest in stocks. However, you're going to have to work for a long time, which is way worse than doing it through real estate. I'd rather work for myself, buy my own assets, than work for someone else for 40 years so they can go buy themselves a freaking yacht. Like, that's not, I wasn't put on this earth to make a CEO more wealthy. That's not, I don't function that way. I'm sorry. You go into real estate using your own money. It's better than stocks because it's faster than stocks because of the fact that you get to leverage. However, you're always limited by your own money, right? It's either going to take you a long time to earn and invest that money, just like stocks, even though you're going to be able to take ownership of much larger assets. We didn't even compare that stocks, the returns that you get from there is very different from real estate, because stocks, you have to pay more taxes. Real estate, you get the benefit of appreciation. Your properties increase in value. Your tenants are paying down your debts. And like I said, tax benefits in addition to the cash flow. But real estate is faster. You have much more control, but you are also limited, once again, like stocks, by the amount of money that you can earn and save that you can invest. So it's going to take you longer. It's going to take you as long as it takes you to earn, save, and invest that money. The path that I've operated in the last 2.5 years and had, the majority of my investing results was buying real estate using other people's money. It is the fastest path. It will get you your results and your goals much quicker. However, understand that there's a lot of responsibility there. So just please treat that seriously and invest in your education. I'm not saying spend money necessarily. I'm saying invest in learning as much as possible so that you can protect your partners and understand that the person who's giving you money had confidence in your ability to perform, at minimum, to not screw them over completely, at minimum, to communicate with them as much as possible, at minimum, just be a good person, right? Like, the problem is there's a lot of bad people out there. And I've seen it in the several real estate investing communities I'm in. I've seen people not just fail an investment project, but like through their own ignorance, through their own being a bad actor, through their own, like, because of what they've done personally, that's the reason why it really made it way worse for their capital partner. And now they're completely discouraged or wasted all their money and they cannot progress forward, whether it's mentally or financially. At the end of the day, pick the path that overall matches your time frame and your risk tolerance. I can go tell people who invest in stocks, hey, do real estate, you'll get there faster, but that doesn't work for a lot of people. It doesn't align with how much time they're willing to invest. Maybe they're not comfortable investing in stocks, and they would rather have a more guaranteed path over 40 years as opposed to a potentially substantially faster path through real estate. And I could tell someone who's doing real estate using their own money, hey, if you use other people's money, you can get there faster, but they're not comfortable with that. You have to do what makes the most sense for you at the end of the day. As I mentioned, my path, right? Over and over again, my path. If your path is real estate investing, now we're really talking about clarity, right? Let's talk about success through real estate. It's very straightforward in my opinion. If you want to be financially free through real estate, you have to have cash flow, right? They have to be paying you money every single month. You have to be earning profits that then cover all your expenses. To earn profits, you have to own properties that are generating you profits. To own properties, you have to close on those properties, right? Well, you have to make them financially viable. You have to operate them successfully. But before you can operate them successfully, you have to close on them, be the owner of them. To be the owner of a property, you really only need two things. You need deals and you need money, right? The money doesn't even have to be yours, just as I presented just a second ago. If anything, it's to your advantage if it's not your own money, in the sense of you're more scalable and you can achieve your goals more quickly. Once again, risk tolerance thing. And it's a skill set thing too. Like, not everyone, I've talked to people who have great deals and they're great operators, but they cannot raise money. They're not investing themselves. They're not investing effectively in the skill set of developing that, or they're not comfortable doing that. But real estate is really simple. You want to own assets. You need deals. You need money, right? So when you ask me, what should I be doing? Well, if you want to own cash flowing assets, you need the deals and you need the money. So what do you need for the deals? You need to clearly understand what types of deals that you're looking for. For me, it's primarily co-living investments, like rent by the room properties, leveraging creative financing. So I'm focusing all my time and energy into sourcing those as high leverage as possible. So how can I get as many great opportunities coming my way? How can I then analyzing those investments, then locking them up, putting them under contract and closing on them, right? So for the deals, it's really easy. It's not, or it's really simple. I would say it's not easy, right? But the path is there. If you want to own assets that generate cash flow, you need deals. You can't do that without having deals. You need deals from somewhere. You don't have to be the one who's talking to sellers or agents. I buy most of my deals from other people, right? However, you need the deals. You need to source them, analyze them to make sure you're buying great investments, and you need to lock them up, put them under contract, and own them. That's the simple path for deals. Then there's money, right? You need money to close on the property, right? To acquire it, the down payment, closing costs, all that good stuff. You need then to get it operational, right? If you're renovating it, if you're furnishing it, you're going to need a couple months of reserves because it's going to take some time to get it fully rented, to do the renovations and all that stuff. So you need the money to be able to buy, renovate, furnish, and manage your property. Cool. You need deals and money, right? Deals, what are you doing? It doesn't really matter what your source is. You need to source, analyze, and lock those properties up. Then you close on them by bringing the money to the deal. You can do that using your own money or your own credit, or you can do that using other people's money. You have to choose which lane you want to go down. I can't tell you. I can tell you exactly what I do. Creatively finance deals through high leverage, using other people's money and managing them as co-living. That may or may not align with you specifically. I can explain very clearly why I've chosen this path, and I have plenty of videos on this topic, but primarily creative financing allows me to buy properties with lower down payments, allowing me to buy more properties. Allows me to buy properties with much lower interest rates, allowing me to generate more cash flow, allowing me to pay down my debts faster. So I'm building wealth more quickly. I'm building my cash flow to be financially free more quickly, right? Through creative financing. I'm also focused on high leverage deal sourcing. I'm not doing all of the work myself when it comes to sourcing my deals. So I can spend more time and energy analyzing great deals and raising money for those deals, as opposed to all the time and energy just going out there, just finding deals. It's better for me to analyze and choose the properties that I want rather than doing all the legwork that comes with sourcing those deals directly. That's my strategy. That's creative financing. The reason for capital raising, I think I've explained it. It would have taken me 40 plus years of just earnings to build a portfolio that I have. Do you need a $20+ million portfolio? Of course not. You can achieve your goals with a few $1,000,000, or even if you're going co-living, you can do it with around 10 properties, right? So you can get there with less than $1.5 million. Yeah, that sounds like a lot, but you're asking to be financially free. You're asking to never have to work again and to have more than enough money coming in every single month and build wealth. So it's going to take some money, right, to do so. We said for stocks, for $10,000 a month, you need around $3 million. You can roughly do that through 10 properties leveraging co-living because they generate you more cash flow and they generate you more ownership benefits, more wealth benefits, and you keep more of your money because of the tax benefits. You can do that with around, on average, 100K, 100 to 125K, 10 properties, we'll say, using your own money, $1.25 million, $1.25 to $1.5 million to buy, renovate, furnish, and have reserves for the 10 properties that you need to become financially free. So it's substantially less, and you can do that way more quickly because it's a lower amount, right? That's why I go, but the fastest path is obviously, even at $1.5 million, the majority of us won't even earn that much money in a reasonable time frame, let alone save that much money. The reason why I use other people's money, I capital raise, is so I can achieve those results faster and get way more returns. But I want to put in perspective that you do not need $20+ million of real estate to achieve the goals that you want, right? Especially the goals for financial freedom. If you want to build legacy and have hundreds of $1 million of assets, or $100,000+ a month coming in or whatever, fine. You're going to need to get even more creative. You more likely cannot earn and invest your way there. You have to get much more creative than that, or have a really long time horizon. Explain why I do creative. I can buy more properties with less money and get better returns for that because of lower interest rates. The raising money instead of using my own, it's way faster. I can do way more properties. It's a better use of my time. I get to provide other people great investment opportunities as well. Achieve way more in way less time. and achieve way more than I'm possibly able to in a single lifetime just through my own individual earnings. And then co-living, why do I do that? Like I said, higher cash flow, higher ownership benefits, way more investments make a lot more sense. Instead of making $100 to $200 on a long-term rental, I make $1,000 to $2,000 plus on some deals through co-living. That also makes it easier for me to raise money. The better your deals do, the easier it is to raise money on a deal. So if you're making $100 on a long-term rental, well, you split that with someone else. Is that going to entice them? More than likely not. So just understand that as a huge factor in my ability to capital raise. I even have people in my own super investors community that have bought properties, generating them $2,000, $3,000, even up to $4,000 a month of cash flow. That's possible with co-living, as opposed to like a long-term rental. So clearly, what are you actually doing right now for each of those things? If you want to be financially free through real estate, you need deals and money. Where is your bottleneck? What are all the distractions that are taking your time and energy away? What are they preventing you from doing? Finding deals, finding money, right? Or using your own money. It doesn't really matter, but where's your time and energy going instead of deals and money? You have to ask yourself that. And then you have to say, hey, I clearly know I want to buy and hold real estate. I need deals. I need money. Here's how I'm going to go about that. You will continue to be distracted unless you're very clear on what your goals are and what path you're going to pursue. Or even worse, you're going to sit there frozen like a lot of people do, like I did 5+ years ago before I bought my first property, because I didn't fully know what path I was going to pursue, why, and how it aligned with my overall goals. You have to do that. And I've explained exactly what you need for the real estate path to financial freedom and how you can maximize all of your results through my super investor path, creative, capital raising, co-living, and why each of those makes sense. So then for you, like, your homework really is to build your step-by-step plan. I can't build that for you. I don't know where you're at with your active income. I don't know how much reserves you have set aside to start investing. I don't know what path makes the most sense for your risk tolerance, what your timeline is. But here it is. Define your ideal freedom goal. How much money do you want and by when? I know when I started, my goal was 5 properties in 5 years. These are going to be small multifamily properties, 2 to 4 unit properties. And I was hoping to generate around $6,000 a month coming in by the end of 5 years, which would cover all of our expenses. Was that like my overall life goal and that's all I want? No, but that would have allowed me to never have to work again to cover all of our expenses and then some. But understand, I was in my 20s, so I had much slower goals. That's okay though. My goal of 5 properties in 5 years and $6,000 to be free like a month, that was a great goal at the time. Then I learned and got much better, and you just need to define what your path is and take action. I did basically that for a year and a half, and then I started expanding on that and started learning more and started accelerating my path and increasing my goals, which is totally fine, but you need a goal. How much money do you want? By when? Then pick your path to get there, right? And make sure it's in line. Make sure it's actually realistic with your goal. If my goal is to do it in 5 years through stocks, well, what would I need to do, right? If it's $3 million, well, I can't say, right, assuming if it's $3 million and I'm starting at 0 and I want to do it in 5 years, so it's 5 years, we're going to adjust the monthly contribution to see what it would take to get there. Assuming the 8% range in stocks, and I'm going to assume to achieve $3 million, you're going to put like over $100,000 a year. And I still don't think that's enough. Oh, I lied. 5 years, 7 million. Oh, I think I put $1 million. No. Oh, this is monthly contribution of 100,000. So let's do 120,000 a year. So that's 10,000 because that's easier math. In 5 years, that's only 703,000. It's not a realistic goal. And I'm saying I'm going to put in 120,000 a year. So how much do I need to put in? 50,000 a month? What is that? 600,000 a year? Cool. I'm at 3.159. So if I invest around 40,000 or 45, let's say 40,000, it's easier math. Let's stick with this. It'll be like 45, right? But $480,000-ish a year, $40,000 a month in 5 years, I can get very close to my $3 million goal. That's why it's very important to understand, is your strategy logical? Most people, like, they don't even think, they don't go through that evaluation as well. Same with real estate using your own money. Is it logical to achieve your results in that time frame? So define your ideal freedom goal, how much and by when, and then make sure your path is actually possible. With stocks, it's easy. You can do the same. You can model out for real estate using your own money. You can model it out real estate using other people's money. I actually give out entire in-depth free training and all the tools you need to estimate your budget, to actually very accurately calculate your budget, track your net worth, estimate your path to financial freedom and how you're going to get there through stocks, through real estate using your money, through real estate using other people's money. I give all that away for free in my Wealth Through Real Estate school community. It's a free community where I'll show you exactly where you find it, just so you can see exactly where you can find that tool. You literally go, you'll probably go here if it's your first time, you sign up, you go, there's the community, there's the classroom, you go into the financial freedom blueprint here. So on the bottom left, and I literally give you a whole in-depth training on financial freedom and how to think about all this stuff. And then I give you a homework plus the tools needed. Let's see. Resources, budget and financial freedom tracker. I give you the training video on how to use it. And I give you the tracker right here so you can do your budget, do your net worth, see what your projections are for achieving financial freedom through the variety of paths. And you can just play around with some numbers to see how quickly you can get there. I give you all that in my free Wealth Through Real Estate school community. I dropped the link down below. And if you're watching a replay later, it's literally down below. Or you can always, if you want access to it, just DM me on Instagram. DM me WTRE, and I will just send you the link automatically. You do that, it's already automated. I'll send it to you right away. All right. That's that piece, right? We're still not done. Sorry. Define your ideal freedom goal, how much and by when, pick your path and make sure it's actually realistic, right? If you say 5 years through stocks, make sure you understand how much you're gonna have to invest. If you say through real estate and you're gonna get 10 properties and you're gonna self-fund them, how much would it cost you to achieve your goals? How long would it take you to earn and save that money? Then break your goal down into milestones. Said I wanted $6,000. Well, that was gonna translate to 1 property a year, 2 to 4 unit properties, and how much it would cost me to invest in those. Well, it was going to be lower cost because I was house hacking. We were owner occupying. We were using low down payment options between my VA loan as a veteran or then an active duty service member and the FHA loan and conventional loans. It would only take me 0% down, 3.5% down, 5% down, and then repeat that to achieve that goal. So I had a very realistic plan. I just went way past that because I continued to develop my skills and wanted to get there more quickly because I was investing in myself and my ability to scale. That's the goal, right? You start somewhere and then you scale, or you just follow someone else's blueprint. There's a lot more information out there now than there ever was before. Like I said, I just gave you my blueprint of how I've been able to. It's been over $23 million of real estate in basically the last 2.5 years. I gave you that blueprint and the results that it generated for me. Break into milestones. How many deals a year? Then break it down. Okay, 6 months, whatever. How much capital are you going to need to achieve that goal? And just make sure it's realistic with your risk tolerance and how much money you're going to have to be able to do that. Then what skills and actions are going to be required? If you want to do co-living, you better learn how to do co-living. If you want to raise capital, you better learn how to raise capital, especially for real estate investments, especially making sure that it's realistic for you to do yourself. If you want to learn creative financing, you got to learn how to do creative financing, right? Once you've got your freedom goal, your path that's in alignment with it, you've broken down to milestones, you create your focus filter. If it does not move you closer to getting more deals or more money for real estate, it's a distraction. I gave you my plan, and I'll tell you the plan for 10K a month in 5 years, actually. 10K a month in 5 years. I would say if you're using your own money, right, it's not going to be possible because you need at least 10 properties. If you're using other people's money, well, you're going to split those returns, but you're also going to be able to buy way more quickly. So maybe you'll need 20 properties instead of 10. So if you're doing 20 properties in 5 years, that's 4 properties a year. That is 1 every quarter, right? We'll get you to that 10K a month goal, and your money will not be a limitation, a bottleneck, because you are raising that money to buy those deals. So the biggest obstacle for the majority of people to be able to fund these deals, you overcome that through raising capital. And maybe you need to buy more properties, but you can do that in a way quicker time frame than you would have otherwise been able to. In 20 properties in 5 years, one for a year or one a quarter is very realistic. And understand that when you're starting out, like my goal, my first year, it might be slower the first year, but it only gets faster and faster. My first year, I bought one property. My second year, I bought 2 properties, but it was a 4-unit and then 20 rental cabins. My next year, I only bought 1 property. The year after that, I bought dozens of properties. 2024, I bought dozens more. This year, I'm already on track to buy even more than I've done the last several years, right? So understand that your journey is going to compound just like everything else as your skills, your knowledge, your reputation, your all these things become easier and better for you. So maybe it's going to be slower the first year or two, but you're building the foundations to accelerate much more quickly. A big part of that is growing your team, which I can't get into right now. So I've walked this exact path, at least my path, creative, capital raising, co-living. You need the right plan. Like that's the biggest thing. You need the right plan so that you are not overwhelmed. You're not distracted. It needs to be in alignment with what you want to do. And you need to learn, like I've given you the path, right? The path I've even broken down step by step, but there's a lot more, right? If you're doing co-living, we need the step-by-step on that. If you're raising money, you need the step-by-step on that. If you're doing creatively finance, you need the step-by-step on that. How are you going to get deals? How do you, like all of that you need to still dive deeper into. Those are the skills that you need to develop. That's what I teach in my super investors community. This is not a call to action for that in the sense that the majority of people that apply, they're not quite ready yet for our community. It's a little bit more of an advanced community. Well, it actually is a more advanced community. We're talking about creative financing versus traditional, which is more advanced. Talking about capital raising versus using your own money, which is more advanced. About co-living versus long-term rentals, which is more advanced, right? To ensure people have a higher likelihood for success, you shouldn't even apply if you don't already have your active income needs met. You shouldn't even apply if you don't already have reserves. You shouldn't even apply if you haven't already started making some progress in real estate investing, at least at minimum investing in your education. You shouldn't even apply to be considered for it. Take advantage of all of the free stuff that I'm giving you, like these live office hours, like my free Wealth to Real Estate school community with a bunch of trainings in there. Take advantage of all that stuff. It's all there for you. If you want more support when it comes to co-living, well, I'm going to be launching something in the near future that's dedicated exclusively to co-living. You're going to get a full-on course for co-living, all the tools and resources I've built and use in my business, and I continually improve so that you don't have to try to figure it all out on your own, and multiple live weekly calls between myself and my team, providing you all the support that you need for how to choose the right property, how to analyze those properties, how to literally helping you do it. If you were to renovate it, some recommendations and feedback from us. If you're going to furnish it, all that extra support, answering all your questions, all that support. If that is something that you'd be interested in, drop co-living wherever you're watching this in the comments, DM me the word co-living, and I will make sure to get you more information on that, right? It's not launched yet. We'll see it'll be coming up soon, but it's not happening at this exact moment. I'm also doing a 2-day workshop, in-person workshop, where I'll help you do literally all of it and give you you get access to all these things as well for life at the co-living workshop. I mean, we're only a few weeks out at this point, so it may not make sense for you. It might be too short of a time frame. I'll just drop the link just in case you're in San Diego or plan to go to San Diego, September 20th to 21st. I'll drop the link for the workshop so you can check it out and see if it's a good fit for you to go. So with that, like I said, super investors, my mastermind community, is not for everyone. I don't recommend that everyone applies to it, at least not yet. If you're a good fit for it or not. Like, you should know at least somewhat if you're the right fit for it or not. If you're struggling with your active income, take advantage of all the free stuff I provide to help you with that and all the other stuff other people are doing. Quick summary. You need to go from distracted to clarity. You need to go from following what other people are telling you to do to choosing a goal that actually aligns with what you want to do. Once you do that, you need to go from having no plan or constantly chasing random plans to following a roadmap that makes the most sense for you. If you got some value from this, feel free to take advantage of all the extra value, all the courses, tools, all that good stuff I provide for free in my Wealth Through Real Estate community. The link is below wherever you're watching this. And if you do get value, please show me some love, comment, subscribe, whatever. Take advantage of the free calculators I provide, all that stuff. Whatever it is, let me help you on your investing journey. I want to help literally as many people as possible. And there's literally no cost for the majority of the things that I do, providing you value. Go ahead and build your plan. I showed you exactly how. I showed you exactly how to think about it. I showed you what the most common issue is for the majority of people. Don't be another one of those statistics. Don't burn yourself out trying to change your family's financial trajectory. Don't burn yourself out and miss out on life. You can achieve your financial freedom goals in a reasonable time frame if you have the right goals, if you're following the right path, and you don't have to miss out this working period. You don't have to miss out the entirety of your life to then achieve those goals. You can do it all, but you just need to be clear and stop distracting yourself and get clarity on what you want to accomplish and stop chasing shiny objects. So with that, thank you guys. I appreciate you guys. I hope you got a ton of value. I apologize. I cannot answer. Well, I'll answer one question. I've got a co-living property under contract, but I've been secure a PML that will hold for 3 to 5 years. Might fall through because of this. Are you saying you can't raise money for the property? If that's what you're saying, yeah, the majority of people can't. I've gotten very good at that. I teach people how to do that. In this one session, I can't tell you, like in the next minute, I can't tell you the entire path for that. But make sure that you're talking to enough people, you understand exactly what their goals are, and you're matching the investments that make sense for what they're looking to accomplish. This isn't about you or your financial freedom path. This is about providing the person with money a great investment opportunity that is in alignment with what they want to do. Then they invest in your deals, and that propels you forward towards your financial freedom goals. Raising capital is not about you, it's about them. But understanding capital raising is what unlocks your ability to achieve your goals much more quickly. There's a very proven step-by-step path that I implement. I teach all the templates, scripts, everything that I use, how I structure deals, all that stuff. If that's something you're interested in, I have some videos on YouTube, but I also teach that very specifically in my Super Investors Mastermind community. Hopefully that was helpful. Oh, I see lots of good comments. Cool, guys. Thank you. With all that, I appreciate you. Have a phenomenal rest of your day, and I'll see you for the next live office hours.